Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Hey, good morning. How are you?
Good morning. We see that some of the top stories that we're looking at today, Paraguay released their bill. I wasn't really impressed. It's nothing like the El Salvador bill,
Nothing
which
impresses
brought
you.
in. Yeah, that is not true. Britney Spears getting, her own her own attorney impresses me. Good for you, Britney. Okay, but other than that, Federal Reserve Chair Jerome Powell also saying that the Fed will release a report on digital currencies in early September. Speaking before Congressman Powell saying that the report will outline the benefits and risks of CBDCs, cryptocurrencies, and stablecoins more broadly.
Yeah, that's going to be something interesting. What we see unfold over the next few months with that. Once they have a white paper that they're planning on all of this, and it'll be interesting to see what's going to happen. Yeah. But it's obviously on their radar. I mean, this is not it's not a joke anymore. It's not just something you see a few people on Twitter talk about. This is a Fed chair.
One line that has been really catching a lot of attention is when he said that one of the arguments that are offered in favor of a digital currency in particular, you wouldn't need stablecoins, you wouldn't need cryptocurrencies if you had a digital US dollar. So
you might not need banks either.
I'm not sure I totally buy that because they're such different animals. And in some ways, you could argue the opposite thing, that it will actually make cryptocurrencies more attractive because they're not issued by a government.
Mm-hmm. Yeah, and it also shake up the banking system too. I mean, if you think about it, if people aren't putting their money in banks anymore, and banks aren't lending out because they don't have as many deposits, for instance, you're talking about a seismic shift in the financial system, and they probably haven't thought it entirely through yet.
We'll have more discussion on that with Nick Day, a regulation policy managing editor, later on the show. But checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at $31,676. Bitcoin is slightly down, just over 2% over the past 24 hours, and the CoinDesk Ether price ETX index is trading at $18.98, still just under $2,000. ETH is down about 2.3% over the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Shapeshift, a global trading and crypto management platform over the past 7 years, is decentralizing. CEO Eric Voorhees tweeting Wednesday, and we have that tweet. Starting today, we begin open sourcing the Shapeshift project, dissolving our corporate structure towards zero and reorganizing around a borderless, decentralized community governed by the holders of the Fox token. Joining us now to discuss is Shapeshift CEO Eric Voorhees in Denver. Welcome to the show, Eric. So would love to hear what led to this decision, and it's an epic tweet thread. So what's going on?
Yeah, thanks for having me on. I think those who have been watching us for the last 6 months are not very surprised by this. But ultimately, we are transforming from a traditional equity-based, VC-backed corporate entity to a decentralized autonomous organization. This is something that I didn't understand really at all even a year ago. So this is relatively new, but the tools have gotten better and better for this kind of thing. And just from the competitive landscape perspective, the most interesting projects in the whole crypto industry are those which are open source, are those which are composable, which are global, and to the degree that it can become immutable, that's what we're after. So Shapeshift is starting that transformation yesterday with that announcement.
Eric, are you going to have a job? I mean, it's not like you need the money or anything, but what are you going to be doing? What are you going to be doing day to day? Are you still going to be involved?
Yeah, of course I'll still be involved. There won't be a W-2 paycheck. There won't be an expectation of a 9 to 5 role. There won't be payroll taxes. Those are all like the least important parts of a job. The most important parts of a job are doing fulfilling work and earning income for that fulfilling work. And with this structure, it doesn't mean that people that work on the projects won't get paid. They just won't be W-2 employees. And that actually frees up the organization to be far more dynamic.
So how much percentage-wise are you going to control after this is all done? I mean, how much Fox tokens do you own now?
Yeah, I'll actually control less of the whole organization than I do today. So I own about a third of Shapeshift today, and I will end up owning around 5% of all the Fox tokens. So that puts me at the plurality, but still 5% is far from a controlling state. So I'll be an influential member of this project, but I will not be the CEO. And certainly I can be outvoted or outcontrolled by other holders of these tokens.
So, is there any precedent for this kind of thing? Is there any precedent for this kind of thing? Like, this is definitely like the decentralized ideal of the crypto industry, but is anyone actually doing this before now?
To my knowledge, no established company has ever decentralized itself like this. There are a number of crypto companies that have sort of a dual mode where they run a open source protocol, but they are still a centralized company. So like Uniswap, for example, has the open source decentralized Uniswap protocol, but they're also a traditional company with an office in Brooklyn. And that is, as far as I know, kind of their plan to run both of those things. We are simply transforming entirely from a centralized organization to a decentralized one. And this will take, 4 to 12 months, but it's a process that we're starting now. And yeah, we're gonna try to blaze a trail here. I think if we can do this well, other companies will see that this is actually a great path for them, especially if they're trying to build a global platform and they want it to be open and immutable.
Well, the truth is, though, right now, as you sort of just said, the industry is dominated by players that have a completely different model. Like if you look at Coinbase, which is, one of the most influential players in the crypto world, this is very much a traditional company with a very top-down, corporate structure. I mean, is this kind of not good for the crypto industry as a whole? I mean, like it does, some would argue that this is not in the spirit of decentralization, these kind of very centralized exchanges.
I'm a fan of diversity. I think it's a really good, it's really healthy for the industry to have multiple models. I love Coinbase. They're a fantastic company. They've been the most important company in the entire industry. They provide a certain service and they've done a great job helping people get onboarded into Bitcoin and cryptocurrencies, but they're custodial. And ultimately, if you're custodial, you're never really bringing the most important attributes of cryptocurrency to your users. So Shapeshift has always been non-custodial. And when you're non-custodial, it begs the question, like, what else can you decentralize? If the key management does not need to be centrally controlled, how much of the company can you actually decentralize entirely? And so that's what we're exploring.
So, Eric, you mentioned Uniswap as an inspiration, but there are some people who are upset with some of the larger holders of Uni allocating tokens out of the treasury. What are you guys going to do different, or what kind of steps are you guys going to take to keep, let's say, a handful of owners controlling so much of the project that it effectively acts like it's centralized?
Yeah, good question. So this is something that we just need to develop with time. And that started with this massive airdrop that we did yesterday. So, we airdropped over 300 million tokens, over a third of the whole supply out to the community. Over 1 million Shapeshift customers and DeFi community members. So that's a start. Me going from a 30% owner of Shapeshift to a 5% controller of the Fox tokens is another important thing. And I think the next largest holder is something like 1 or 2% of those tokens. So we're trying to decentralize as effectively as we can. We have the advantage of being, purely centralized today. So every day that goes by that we become more decentralized, I would say, is an improvement on the status quo and an improvement on what we were.
And I'm curious, what happens to your investors who invested in Shapeshift? Do they get a proportional control of the Fox tokens? And Well, first of all, let's go with that question first.
Yeah, so part of the challenge here is like we have to treat all the stakeholders of Shapeshift really well. We have to treat our shareholders well. We have to treat our employees well. We have to treat our customers well. And so it's been very important to us to be careful about how we do that. All of our shareholders received a healthy supply of Fox tokens themselves, and Shapeshift has a healthy balance sheet, and they will be getting those assets pro rata as we liquidate the company over time. So from their perspective, this is a great deal because they get a return on their investment and they still get upside into the future. And anyone who invested in Shapeshift is here for the revolution. They're here to try something new. They're here to push the boundaries. They're here to be pioneers. And the investors that have talked to me about this love it. The vast majority of our employees love it. And certainly if you saw the community response yesterday, they were thrilled.
Yeah, and the follow-up to that is like, what happens to the staff? How do they get paid under this new model? How do new hires happen?
Yes, so the staff will all end their normal W-2 employment in 3 waves throughout the rest of this year. So they're all aware of this and have been for a couple months. They've all received a healthy supply of Fox tokens as well. So depending on where the price sits, they currently are ending up far better off financially than they were just getting a normal 9-to-5 paycheck. Now, they can do what they wish after they leave normal employment. Many of them will still stick around and be part of the Shapeshift project. Some of them will go on to do other things, and that's totally fine. But into that, we get the entire world of interested people that want to contribute to this open source project. So instead of just having 65 9-to-5 employees, we will have thousands of diverse people from around the world contributing 30 minutes, once a month, or full-time passionate work, just as they would if they were at the company.
And is that on a voluntary basis, or how do staff get paid?
Yeah, they received a bunch of Fox tokens. So really, it makes them all kind of entrepreneurs, right? Like just like me, starting a company, I don't make $1 unless the whole thing is successful over the long term, and there's a lot of risk to that. The employees now get put in that kind of position as well. And for some of them, that won't be the right fit, and they'll want to go find a normal W-2 job somewhere else. That's totally fine. For a lot of them, they have entrepreneurial creative energy themselves. And even though it's a little scary and new, it's an opportunity that they can really seize. And I think it'll ultimately bring kind of the best talent to bear on Shapeshift who are here contributing for the right reasons.
So legally, Eric, you're dissolving the company. Now, have you talked to regulators? Have you talked to the IRS? Obviously, you've probably talked to a lawyer about it. What happens legally with you guys? What happens to your rights and any sort of intellectual property that you have? And as far as your employees, do they then file, even if they're Fox holders, do they then have to file for unemployment, go scrounging around for health insurance, et cetera? Like, how does it dissolve as if it's a company that's gone bankrupt?
Yeah, so great questions. These are all the things that we're navigating. So from a corporate perspective, this is essentially a liquidation of the Shapeshift balance sheet and an ending of the corporate entity. Now, that will be done over months. It actually could take over a year because we'll have to do our last tax filing in the last year that we're operating. And so there can be kind of a long tail of that. But yeah, the corporate entity is winding down. But the corporate entity is really the least interesting thing about building a project with other people. So I won't comment on our discussions with regulators. Obviously, we pay all of our taxes and have for 7 years at this point. That for-profit business will go away, and in its place is simply an open source crypto interface that the entire world can use. And my hope is that this becomes far more dynamic, far more flexible, and far more immutable. It's not tied to any jurisdiction anymore.
Eric, one of the reasons the decentralization model has been so hard is because of regulators. And probably, if you look at the example of Binance, right, which has kind of tried, relative to other centralized exchanges to do this crypto model where they don't really have a headquarters and they're not really based anywhere. And now we're sort of seeing a regulatory crackdown on Binance all over the world. Do you think you guys are sort of going to be able to pull this off? Or, because regulators tend to come after, people who try to do this kind of thing, who try to avoid traditional corporate structures?
I'll say that we will always follow the laws, and we are going to find those ways that we can act within the laws and provide the best service for our users that we can. So, unlike Binance, we meaning me and everyone else involved in Shapeshift. So it's just individuals, and really that's all a company is, right? Like, people get caught up in the trappings of a centralized entity, but it's just people. So we're just people still working on a project, and anyone who wants to be involved can do so. Unlike Binance, we're not custodial, so we really can be decentralized. The Binance.com exchange cannot ever be decentralized, and I think that's why we've seen CZ be very interested in the move to Binance Smart Chain, and they're certainly pursuing their own means of decentralization. It is a challenge. It's like new ground, and I think a lot of people are going to try and explore that.
Eric, I'm wondering about what led to this decision, because in the past, you're a serial entrepreneur. You've been involved with many ventures within the space, and you've come into conflict with the SEC, $50,000 in fines for a gambling site you had, and just a lot of inquiries and investigations. So does that contribute to the reason why you just want to do away with the traditional corporate system? Has the traditional system just not worked for you in that regard?
I will say that regulatory friction absolutely has a part in this decision. I am in this industry to build tools that help bring financial sovereignty to people. That's why I first cared about Bitcoin from the moment I saw it. That's why I build and work and care and am passionate about this entire industry. If this industry does not bring financial sovereignty to individuals, the whole thing is pointless. And so I'm going to do whatever I can to further that goal. Sometimes that means we have to be in the gray area, and I think that's okay. I mean, I wish there were more people willing to be brave and to push the boundaries and to fight for principle instead of just trying to get along and make some profit. But I'm going to do it, and hopefully that will help inspire others to do so as well.
And finally, Jackson Palmer, who was one of the co-founders of Dogecoin, came out with an epic tweet thread himself yesterday saying, after years of, I'm often asked if I will return to cryptocurrency or begin regularly sharing my thoughts on the topic again, my answer is a wholehearted no. He also says, after years of studying it, I believe that cryptocurrency is an inherently right-wing, hyper-capitalistic technology built primarily to amplify the wealth of its proponents through a combination of tax avoidance, diminished regulatory oversight, and artificially enforced scarcity. He goes on to say that despite claims of decentralization, the cryptocurrency industry is controlled by a powerful cartel of wealthy figures who, with time, have evolved to incorporate many of the same institutions tied to the existing centralized financial system they supposedly set out to replace. I wonder your response to Jackson Palmer's
yeah, it's quite a visual. You definitely get the evil robber baron with their hat and their monocle, stealing from the poor. I actually think a lot of what he said is correct. It is hyper capitalistic. And thank goodness there's actually a system that is hyper-capitalistic. That is supposed to be what America was about. It was supposed to be a free market, capitalistic country. And it is devolving into socialism in front of our eyes. Thank goodness that cryptocurrency has come around and provided an alternative while forcing that alternative on no one. It's a purely voluntary market-based system, and I think the world is richer for it. So unlike fiat currency, unlike the banking establishment, unlike the huge regulatory state, this is all voluntary. So Jackson, was involved and created the Dogecoin, and then he left, and cool, that those are peaceful interactions. And I think as long as something is based on peace, it's valuable.
Do you think it can remain that way?
It can remain that way to the degree that self-custody is maintained. So if cryptocurrency ends up in a bunch of custodians only, it will lose the most important properties that it has brought. So that's why Shapeshift from its beginning has been a self-custody crypto platform. I don't have a problem with other platforms being custodial. I just hope that that does not become the only way that people interact with these things. And I think if anyone watches the DeFi movement, all that stuff is self-custody. And there are hundreds of thousands of people using decentralized finance, pure self-custody from the base layer. I think that's a great sign, and we're going to help contribute to that wherever we can.
All right, Eric, really interested and excited about how this develops. So good luck.
Thanks.
And we'll be watching. Thank you, Eric. That was
Thanks,
Shapeshift
guys.
CEO
Appreciate
Eric
it.
Voorhees. Coming up, checking in on Asia and a crypto markets update with crypto data firm TradeStation.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, July 15th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, Indian High Court seeks advice on crypto advertising disclaimers. Hong Kong Customs makes its first crypto-related money laundering bust. And K-drama Vincenzo joins the NFT bandwagon. Let's get you up to speed from Asia to the world. In India, yet another move that could offer an indication over the future of crypto in the country. Delhi's High Court has sent a notice to various government agencies and crypto exchanges seeking advice on guidelines for crypto-related advertising. That's after a plea was submitted to the court by two lawyers requesting that a standard disclaimer be added to all such advertising. Now, the Ministry of Information and Broadcasting and the Securities and Exchange Board of India, as well as several crypto exchanges, have been asked what form any such disclaimer should take. That includes everything from the size of the text to how fast it's read. One of those exchanges was ZeroX that while this specific petition is not all that important, as the Advertising Standards Council of India already has guidelines in place for all investment adverts, it's good for crypto visibility.
It has created a conversation around the whole crypto space, which we see as a positive development for the industry, because now more and more people will be talking about it. Media will cover this, and a few people will have some understanding of crypto space generally.
Still, the status of crypto remains murky in India. That's after the Reserve Bank of India issued a circular banning crypto in 2018. Despite the ban being overturned by the Supreme Court a year later, lawmakers are now considering legislation that could ban crypto in the country altogether. Over in Hong Kong, customs authorities have made their first ever crypto-related money laundering bust. The operation, codenamed Coinbreaker, centered around a known money laundering syndicate. Authorities found suspicious transactions totaling 1.2 billion Hong Kong dollars. That's about 155 million US dollars. And they have found that these transactions had taken place via a virtual currency exchange between February of last year and May this year. The suspects had opened accounts at various banks in Hong Kong, then made transactions via a crypto exchange, reportedly using stablecoin Tether to do so. 4 people were arrested but are now out on bail. Authorities seized items including computers, mobile phones, and documents as part of the ongoing investigation. And police say we could see more arrests. Meanwhile, financial services giant Visa has partnered up with Australian fintech app CryptoSpend to offer the first debit card in the country to allow Bitcoin spending. According to a report from the Australian Financial Review, Australians will be able to use the card to make payments in Bitcoin, with the equivalent amount in fiat currency being received by any account in the country's banking system. The card is known as a zero balance card, as the balance in Australian dollars is variable, and it draws from the value of the Bitcoin in its wallet to pay vendors in fiat. Now, Visa has already partnered with over 50 crypto platforms to offer such cards in other countries. And on the markets now, Bitcoin was up 1.5% at just under $32,500 US dollars. That's as of 4 p.m. Hong Kong time at the end of the Asian trading day. And in the top 10 for cryptocurrencies, Ethereum up 3% and Binance Coin up 2.5%. And finally, K-dramas are the latest to join the ever-growing NFT bandwagon. Korean crypto exchange Korbit has partnered with the country's biggest TV drama producer, Studio Dragon, to release NFTs related to the hugely popular K-drama Vincenzo. Unlike many NFT sales, where items are auctioned off to the highest bidder, in this case, a limited edition of just 100 pieces of artwork based on the show are to be sold at a set price. Korbit told Forecast News the twist is that anyone who wants a chance of buying one must pre-register by July 20th. Then when the sale opens on July 21st, the first 100 people who click buy will actually get the opportunity to make a purchase. Well, you gotta be in it to win it, as they say. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time for a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at $31,845. Bitcoin is slightly down about 2.6% over the past 24 hours. And the CoinDesk Ether price ETX index is also trading down about 1910. ETH is down about 1.7% over the day. And joining us now to discuss the crypto markets is James Pucha, head of innovation labs at market data firm TradeStation. Welcome to the show, James. So we want to get your markets analysis, but first we just had this interview with Eric Voorhees, CEO of Shapeshift. He is decentralizing, going from a centralized traditional company to a fully decentralized company with no share structure, corporate traditional structure. And I believe you have some thoughts on this. You don't think that timing is an accident, do you?
So I think the challenge that we have is most of us use today's models to evaluate what Shapeshift is doing. And I think that's where we get a little bit stuck. What we're not really focused on or talking about, which is interesting out of this, is that the labor markets have fundamentally changed. And this has been an ongoing shift for multiple years between, so we created eBay platforms, we created Uber type platforms, we created content platforms where people are able to start generating income outside of a traditional workforce. And we're starting to see a much larger adoption of these types of platforms. And with decentral autonomous, with DAOs that like Shapeshift is going down, it starts to create an interesting paradigm where people can choose where they work for. And this was really accelerated during the COVID times where most of the companies went remote. So we kind of took this environment where we used to have to go to the office. We made it so we don't have to go to the office. We made our labor forces mobile to be able to work for any firm remotely. And we have a huge group of people that are participating in the Uberization economy. And you start to see companies like Shapeshift come out. And it's really interesting because you don't have to necessarily be a full-time employee. And a lot of the questions were around what happens to your employees. Well, people now get to start looking at companies like Shapeshift or others and working on the stuff that they're most interested in, not necessarily as the only thing they do. They might be content creators, they might be doing things around staking, they might be participating in Shapeshift, maybe working on the Bitcoin protocols, but they can do a few things earning a good income and not have to be tied to one central vehicle or job. I think that shift is starting to become really interesting. We look at Shapeshift and we say, wow, pretty exciting, but it's that funny crypto company. That's not necessarily going to be the case because, sorry, go ahead.
Is that part of why we're seeing the DeFi market boom right now? You know, Bitcoin is it's in a bit of a lull. It has certainly had its run since December, and the DeFi market is taking off in its place. I wonder if it's related, and also a lot of people who aren't familiar with crypto would be very uncomfortable with earning in crypto, given the volatility. So maybe you could address that.
Yeah, so let's maybe first talk about the DeFi markets. What happened, and again, in beginning of 2020, 2020, I think at this point, when we all went on lockdown, it kicked a lot of people into side hustle mode and trading. And that became very interesting for folks to engage in some form of trading. There was no sports. There was not a lot to do. So they started to get engaged. At that time, the DeFi markets were really primed for people to start engaging in different types of trading strategies, whether that would be staking your assets, whether that would be creating an automated market maker type contribution where you can earn interest on making markets, or just trading through these various protocols like Uniswap, Polkadot, or Compound. And that allowed people to start to really wrap their heads around more advanced trading concepts, but outside of the traditional financial structures. So that's really what drove a lot of this, in my opinion. Now, regarding the getting paid in crypto, I think there is definitely concern for folks that are about getting paid in something like Bitcoin that has more volatility. But stablecoins are starting to become a more commonplace, where we're seeing a lot more folks that live and breathe, conduct business in types of stablecoins. And kind of building onto that, if you start looking at things like the metaverse, where you have these large platforms that people live, play games, they own property, they own assets, they sell things, and they earn money, they're earning usually in some type of digital native token, whether that's a stable coin or a crypto asset. You have 2.5 billion people that are participating in the metaverse. 100 million people on a daily basis in the US engage in the metaverse, whether it's a gaming platform or something else. So the people are used to having some form of income from that type of interaction. So I think as more people get adopted to it, that concern about volatility starts to become less and less.
So, James, I'd love to continue the conversation, but of course we got to talk markets. And you brought up stablecoins, and so in the past few weeks we saw several $100 million worth of Tether reduced out of their asset base. So their total market cap went from 62.7 to about 62 right now billion. USD coin USDC had a dip in its assets as well. Are we looking at money being pulled out of the market? And if we're using stablecoins as a proxy for interest, are we seeing just people losing interest in general, are starting to lose interest in crypto and walking away from it and cashing out whatever they have, or taking their losses and going home?
So from what we see from our vantage point as a service provider, we do not see that. Typically what we're going to notice is that when markets are a bit shaky or they're maybe in a bearish market, we'll start to see folks shift out of a digital asset into something like maybe Bitcoin for safety, but if that's coming down, it's not necessarily that desirable, or USDC or Tether. And now that we're in this area in the mid 30,000s, folks are starting to get really interested again, and quietly behind the scenes, the advanced folks are accumulating and consuming a variety of the crypto assets. What we do see is an inflow of stablecoins and assets. And generally, if you look at the on-chain data, you're going to see an outflow of crypto assets off exchange. And so that's not indicative of a lack of interest. It's maybe on the retail side, it's a lessening interest, but in sort of the crypto larger players, the flows are telling us something a lot different, that there's definitely an attraction even at these prices.
James, is it a good buying opportunity right now?
I can't make a recommendation, but if you, I am very interested in these prices. I think that if you were to zoom out on the chart, you'd be very, very disappointed if you didn't participate at this price.
Okay, we'll leave it there. Thank you so much, James, for joining us.
Thank you for having me.
All right, that was TradeStation Head of Innovation Labs, James Putra. Coming up, more discussion on Fed Chair Jerome Powell's stance on crypto with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hey, Nick, so we heard from Powell speaking before some congressmen yesterday. He commented on stablecoins, and we have a clip. Let's roll it.
The market just disappears, and that's when people will want their money. So, it's very simple. These are economic activities that are very similar to bank deposits and money market funds, and they need to be regulated in comparable ways.
So just want to get your reaction to some of his comments on stablecoins, Nick.
Yeah, I think this is kind of part of the broader trend we're seeing with regulators and lawmakers around the U.S. Increasingly say that stablecoins are something that needs to be, regulated. They need to be regulated in specific ways, whether that's through, bank regulations or through, maybe a tighter enforcement of securities regulations. But it's definitely been a noticeable shift from, even a year ago, people were talking about stablecoin regulation through the lens of the now defunct Libra project. So, global stablecoins backed by a basket of fiat currencies or something comparable to that. Now we're talking about stablecoins backed by a single asset, namely the US dollar. And, we've got lawmakers name dropping projects like Tether during congressional hearings and federal Fed bank officials naming the same cryptocurrency in public letters. So there's definitely, this shift that we're seeing towards, greater conversation about crypto stablecoin regulation. And I think the big question now is whether or not that will actually lead to any actual concrete regulations or guidance or, anything beyond just conversation at this point.
So do you think that part of what we're seeing here is we have Powell, who was, did name drop Tether, as you said, and the thought that he would have done that, let's say 2 years ago when the project was only a couple of billion of dollars, would have been unimaginable. But do you think now that they're bringing it up, they're kind of slowly getting into it because of the systemic risk that it could have if they act too swiftly or too sharply? In other words, that if you now have 60 billion of these things floating around, and if they take any sort of severe regulatory action, it could have repercussions beyond the crypto markets?
Yeah, I mean, if the argument is Tether is a key player in the crypto markets, and the crypto markets are at this point, it's more than just Bitcoin. You have futures, you have a lot of retail and institutional investors who are now in crypto or exposed to crypto through various products, whether, that's through their investments in funds that hold MicroStrategy stock, or if they're somehow exposed to futures that are being held or traded by other parties on CME or wherever. There's definitely, I think, a noticeable concern that this is now bigger than just the crypto markets, strictly speaking. And if they act too quickly or too recklessly, and there's a follow-on effect that would impact more than just the crypto traders.
Nick, I wonder if you could comment on his when he said, you don't need stablecoins. We wouldn't need cryptocurrencies if you had digital U.S. currency.
Yeah, I'm not too sure. I guess one of the arguments there is, if your idea about crypto is that its value proposition is electronic payment system that's faster and cheaper and easier to use than the existing U.S. at least payment system, then I think that argument makes sense. But if you're looking at crypto as something that's supposed to be stateless or free of government control and free of centralized control, then I think that argument falls apart a little bit. But a lot of the conversation around the digital dollar is that first argument that it's supposed to create something that's more accessible, faster, cheaper, much easier to use than electronic payments in the U.S. right now, which I think might actually even strictly be a U.S. problem. I think in Europe and other countries, you do have other forms of electronic payments that don't require crypto that are fairly, easy to set up and utilize.
Nick, we also learned that this Fed report on the central bank digital currency is likely to come out in September. Do you think we're going to see anything interesting in this report?
So actually had a chance to email a spokesperson at the Boston Fed last night, and I heard back. So the report coming out in September is separate from the central bank digital currency report that the Boston Fed still intends to publish sometime this quarter. So we're now expecting, it seems, at least two different reports. One that's going to explain how the U.S. federal bank is going to be looking at, a central bank digital currency, so a digital dollar, and a separate report that's looking more at, it sounds like, policy and regulations around crypto more broadly. So I think that could be very important, especially if, as we said before, there's a lot of conversation right now, but it remains to be seen what the concrete regulation will results from this conversation will be. And that report might be a, key symbol or signal for what that'll look like.
Cool. Nick, thanks for joining us this morning, and appreciate you watching the developments in DC.
Thank you.
All right, time now to check in with Crypto Twitter with our tweet of the day. This one from Jackson Palmer, co-creator of Dogecoin, who famously left the project, saying he's often asked if he will return to cryptocurrency, and his answer is wholehearted no. Tweeting, the cryptocurrency industry leverages a network of shady business connections, bot influencers, and pay-for-play media outlets to perpetuate a cult-like get-rich-quick funnel designed to extract new money from the financially desperate and naive. Jackson, if you want to come on CoinDesk, we'd love to talk to you. You won't have to pay to play. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.